Hi, I'm Ollie from North Property Group, and welcome back to another quarterly market update where we're going to look at certain changes that happened in the property and investment landscape towards the last quarter of 2024. From Labour's first budget in over a decade, we'll see how things have changed with house prices and mortgage rates, and we'll have a look to see what sort of trends we're expecting in 2025. Let's start with interest rates. The Bank of England's base interest rate directly impacts what lenders can lend at. Now, in early 2024, the base rate was 5.25%. That was dropped to 5%, and then in November, it dropped down to 4.75%. We're starting to see a decline in interest rates. If we look where we were at a year ago, 2 years ago, we were sort of seeing rates at 7%. They are starting to come down now. It's showing a lot more confidence in the market. The final quarter of 2024 showed the strongest market we've had in over 4 years. Sales were up 25%, buyer demand was up 26%, showing a real resurgence in the property market. Turning to property prices, we're seeing steady growth year on year in the UK. Places like the Northwest seeing one of the highest growths in the UK. Rental trends are showing a very similar upward trajectory. Outside of London, over 5.2% rental increase, and even inside of London, over 2.4% increase. Now, it's showing the serious demand and imbalance of supply in the market, and the rental market just keeps growing year on year. It's actually the 19th consistent quarter of rental increases. Now let's talk about the first Labour budget in over 14 years. We expected big things, changes with taxes, tenancy rules, transport, and a lot of funding, all which directly impact the property and investment market. One major change was the stamp duty that increased to 5% for second homes. However, one of the big anticipated changes of the capital gains tax actually didn't affect residential homes, which is a huge benefit to investors. The budget also showed a clear focus on making mortgages more accessible, creating more homes, highlighting the imbalance of supply and demand. That's going to show a lot more confidence to investors. In our last market update, we discussed how Labour were bringing in some environmental changes for the better. One of theirs was by 2030, they want all rental properties to be at least a C on the EPC rating. At the moment, the average EPC rating is actually a D. This is going to affect certain landlords and the cost that they may have to do to get their property up to a C. However, the average EPC rating on a new build property is actually a B. It's mainly because developers have to keep up with sort of the trends that the government set. I suppose one of the benefits of buying off plan is you've got a lot more security in knowing that when your unit comes up to completion, it's more in line with government regulations. Looking ahead to 2025, experts are already predicting more rental growth. Especially in places like London, we're expecting a much bigger bounce back with people looking to move into the city. Sort of post the pandemic, when a lot of offices took more remote work, we're expecting to see a lot more of those offices come back and actually have a base in London now. House prices are projected to increase even more in 2025 than they did in 2024. Mainly due to the fact that we anticipate a very busy 2026. And with mortgage rates coming down, by the end of 25, we're expected to see 4.2%. It's just going to continue to increase buyer demand in the market. As we step into 2025, the property market has plenty of opportunities and remains very strong. Although there's still plenty of changes that are happening, and it's really important to stay informed and updated. Definitely give us a follow. We'll provide more quarterly updates and general market updates to help you, especially with your investments. Thanks again for watching. We'll see you next time for some more property insights.